Welcome back to Boring Currency, where we track physical metals, paper market stress, and the forces reshaping the global financial system. Do me one favor right now. Fix your eyes on the screen. Silver just blasted straight through $82 an ounce, and I can already hear the retail crowd panicking. Oh no, it's a bubble. Dump it, lock profits, sprint back to safety. Safety? What safety exactly? You're going to dump a tangible asset to run back into what? The US dollar? That's like leaping off the Titanic to hitch a ride on an iceberg. Let me be perfectly clear. What you're witnessing today is not silver becoming overpriced. Rocks don't wake up one morning and decide they're valuable. What you're seeing is the US dollar spontaneously combusting in a financial dumpster fire. This is a live crime scene, ladies and gentlemen, and there are two culprits standing over the body with smoke still rising from the weapon. Suspect number one, central banks. They are staring directly into a debt abyss so massive it makes the Great Depression look like a rough weekend in Vegas. They aren't printing money because they want to. They're doing it because there's a metaphorical gun pressed to their skull. They're paying one credit card with another, and now the statement has arrived. Suspect number two, Mother Nature herself. While the media kept you distracted with nonsense, the mining sector quietly confessed something terrifying. We ran out of silver a decade ago. Peak silver happened in 2016. We've been living off leftovers ever since, and now the buffet is officially closed. $82? Cute. That's the appetizer. If you think this is the top, you're not watching closely. In the next few minutes, I'll explain why holding cash right now isn't conservative. It's suicidal. Strap in. Let's talk about the number the Treasury hopes you never focus on. The figure that keeps the Fed chair awake at night, drenched in sweat. Interest expense. We need a blunt conversation about America's credit card bill. Right now, the US government is torching between 4 and 6% of total GDP just to service interest on its debt. Do you understand how horrifying that is? 4% sounds small. It isn't. It means the government now spends more on interest than on the entire US military. Think about that. More money goes to yesterday's debt than to defending the country today. More than Medicare. Let me explain this with kitchen table math. Imagine you earn $10 a month. Before groceries, before gas, before rent, before your kids' shoes, $6 get thrown out the window just to cover minimum interest on a credit card you maxed out 10 years ago. You're not touching the balance. You're not reducing the debt. You're just paying the banker's toll to survive one more month. That is America right now. A debt junkie on life support, a superpower downgraded to subprime. And that brings us to the real villain, the Federal Reserve. For decades, the Fed played God. They claimed they could fine-tune the economy like a thermostat. Too hot? Raise rates. Too cold? Cut them. They convinced an entire generation that a debt-based fiat system could last forever without consequences. But the invoice has arrived. The Fed is now trapped in a room without exits, staring straight at a damned if you do, damned if you don't reality. A gun to the head moment. And the options are both disasters. Option A, fight inflation. That means keeping rates high and pretending to be tough. But do that, and interest costs explode. The government becomes mathematically insolvent. Tax revenue can't cover interest. Shutdowns follow. Social security checks bounce. The bond market implodes. It's instant systemic self-destruction. Option B, save the government. That means cutting rates and printing money to buy government debt nobody else wants, monetizing the deficit. And that's exactly what they're doing. What happens next? A tidal wave of liquidity floods an already saturated global system. The dollar stops being a store of value and becomes a political bailout token. They didn't choose a solution. They chose their executioner. They chose option B, sacrifice the currency to preserve the state. And this morning, the market finally caught on. The verdict is in. The data doesn't lie. Smart money stopped listening to speeches and started reading math. The dollar index, DXY, just crashed through a 15-year support level. That line was a fortress, a psychological anchor holding the system together, and it collapsed like a sandcastle in a tsunami. Hear that sound? That's confidence evacuating the building. That's nations, pensions, and hedge funds realizing the emperor has no clothes, no gold, and a maxed-out credit card. When the dam breaks, where does the water go? When treasuries become return-free risk, where does capital flee? Not bonds. Why buy 3% when inflation is 10? That's guaranteed poverty, not savings accounts. That's just a slow leak. It runs to what governments can't print, what politicians can't debase: gold, land, and most violently of all, silver. That's why this move is vertical. It's not speculation. It's capital flight. It's a crowded theater screaming fire and discovering there's only one exit. Silver is that door. It's the only asset that's both monetary metal and industrial necessity. The only one still priced far below its inflation-adjusted high. So when you see that green line launching skyward, don't let them gaslight you. Bubbles disconnect from reality. This is reality reconnecting. The dollar is sinking. Silver is the last lifeboat. The band is playing. The captain says everything's fine. But the water's already at your knees. $82 is just the opening act of a global repricing. And if the dollar story scared you, buckle up. That was just the appetizer. The main course is geological reality, and it tastes like dirt and disappointment. For 20 years, mainstream finance sold you a comfortable lie. They said commodities behave like widgets. Higher prices bring instant supply. The earth is a vending machine. Insert money, receive metal. They treated silver like software. Copy, paste, new mine. Geology doesn't care. While you watched Fed pivots, miners slammed into a wall so thick that even $82 can't break through it. Peak silver happened in 2016, 10 years ago. Despite better tech, AI exploration, and billions spent, global output didn't grow. It shrank. We were driving 80 miles an hour, staring in the mirror, thinking the tank was full. The engine died miles back. We just coasted. The easy silver is gone. Ore grades are collapsing. Mountains get moved for grams. Extraction is deeper, slower, pricier. Prices stayed low because we drained stockpiles. We burned inventory. Now the warehouse is empty. But silver's $82. Miners will dig faster. That's the burger flipper argument. Mining isn't fast food. You can't rush physics. A mine started today produces metal in 2031, maybe later. Permits, protests, infrastructure, no instant button. Supply is fixed. Worse, it's shrinking. Old mines die faster than new ones are born. That's not imbalance, that's famine. Now look at the vaults. LBMA, COMEX, once the price smashers. They're out of ammo. Registered silver is gone. Shipped east. Turned into solar panels. Western vaults echo. Paper markets shout. Physical markets laugh. Call a refinery. Ask for a 1,000-ounce bar. Hear the silence. 8-week delays. Massive premiums. That premium is the real price. And now panic enters. This isn't just investors. It's industry. Silver is civilization's addiction. Solar panels, EVs, AI servers, missiles. No silver, no future. Tech giants don't care about price. They care about survival. If silver hits 200, phones cost $5 more. No problem. No silver? Assembly lines stop. Stocks go to zero. So they bypass markets. Call miners directly. Hoard supply. A procurement war has begun. Add it up. Dollar collapsing. Mines empty. Industry desperate. That's not a bubble. That's scarcity. $82 is a clearance sale. Once Apple and Tesla publicly fight for inventory, prices will sound insane. Vaults empty, mines tapped, printers screaming. Do the math. And if that wasn't enough, welcome to the industrial black hole. Solar panels are silver tombs. AI devours conductivity. Sovereign funds are hoarding. BRICS is de-dollarizing. Vault doors are slamming shut. February 9th, 2026. Silver at 82. Waiting for cheaper prices now is standing in a burning building hoping the fire cools down. This isn't cyclical. It's structural. The old normal is dead. You have one choice. Stay in the system, or become your own central bank. The window is closing. Soon there won't be a price. Just sold out. Don't say you watched it happen. Say you acted. I'll see you on the other side of 100.